Hello, everyone, and welcome to today's Stocks and Crypto Weekly Watch List. I am No FOMO Charts. Today is Sunday, February 23rd, 2025. It's just after 7:30 p.m. Eastern Standard Time. Welcome, everybody. This is a swing trading and investing technical analysis charts YouTube video and channel. I start off with stocks in the first half, crypto in the second half. We have quite a bit of earnings releasing. This week, we have economic data and stock and crypto news, which we'll cover at the end of this video. Let's start off with stocks. S&P 500, Friday, we had a flash crash capitulation. This actually happened back on Wednesday, but that was more of December 18, 2024, I should say, because that was more of a FOMC crash. This particular crash was a combination of different factors. First off, President Trump tariffs keep getting worse, basically. Mixed corporate earnings, for example, Walmart had bad earnings that week. We also have consumer sentiment is down, potential sticky inflation, FOMC potentially not cutting interest rates as much as we thought. The Doge government department is firing too many people, for example, according to the news. And global politics all combining in a capitulation flash crash sell-off. Were there technical warning signs? There were. We had a resistance below 613. On our weekly chart, we're starting to lose momentum. I have a squeeze indicator down here, but we're starting to lose momentum. Our MACD line has been down crossed for almost 2 months already. The daily chart hit this zone of resistance at 608 to 613. The 4-hour, you're starting to see now the price action. If we ignore indicators, we can see the price action starting to hesitate. We had this type of head and shoulders on the intraday, and we lost that support level. We tried to reclaim it on Thursday or Friday, and then we had the consumer sentiment was the final bearish catalyst. It's not completely over yet because we're starting to get a little bit oversold in this 15-minute. You can see on the price. Hopefully this stops somewhere. Potentially maybe going to 599 or even 598. Let's open up a pivot point. We lost the pivot, unfortunately. So we're just flagging on that 15-minute. Futures not moving so much today. But the larger pivot on the daily is 596. So possibly I'm looking for either a triple candle reversal pattern like a morning star or a consolidation to the side or a V-shaped type of recovery somewhere down here in the 597 range looking ahead. QQQ is very similar. We hit the daily pivot point. We tested it, and this is what happens. If we can't push through the pivot point, which was 530, 750. And somebody tried to short already on Thursday, and you could kind of see the momentum getting lost. This support level breaking down to the downside. There was too many longs. Think about this. This is how I think about it. Too many longs. After the tariffs going up and down, on and off, we broke bull. People thinking we're going to rally. Even I thought we were going to rally a little bit stronger. But the news and the corporate earnings and the tariff government changes overrides the technical charts. We're living in an age right now where news, government news and corporate news, earnings releases, is actually more important than the technical charts. So I'm being basically forced right now as a charts analyst to check the news a lot more than I did 1 or 2 years ago. It's a regime change. So, in Nasdaq, where are the targets? Our weekly, we hit that double top just below 540, losing momentum. The daily hitting that pivot and rejecting. The 4-hour now approaching, not quite oversold. The hourly is getting into that oversold range as well as 15-minute. So it probably we're going to get maybe one more pullback into an oversold bounce. Now, exactly where is it going to stop? That's up to the big market day traders, I would say. But we do have a support level in the 524 range. And again, I'm looking for some kind of reversal pattern. It'll probably pierce down into here, somewhere into like 524 or possibly deep into 519. And I'm looking for, again, triple candle pattern, consolidation to the side, some kind of bounce or V-shaped recovery intraday. It's a very similar setup. Dow Jones got hit hard, but the flag setup and the support zone. So we're looking at, it was a 2% range. If the breakdown was exactly 2.1%. So the algorithms, the large account, the big money traders understood this could be a double top in the market if we back out to a weekly. And you can see this looks very weak. All of these candle wicks for an entire month. This is all tariff on and off sell off. And then finally, you know what? Somebody said this is a weekly lower high and we're going back down. So Fibonacci retrace low to high, I'm including a wick in this case. We're right above the 50% retrace for the last month. So basically we're looking at 433 and 429 as our support levels, 429, and seeing if we're going to get that bounce. That's what I'm looking for. Here on the daily chart, we lost the pivot point. Same setup. Losing the 4 hours, getting into the oversold range, 1 hour, getting really oversold into that 19, but it's not all about the RSI. It's about the price action. So for example, on a 15-minute, what am I looking for? I'm looking for a trend change. You can see in the 15-minute, last time we had consolidation, basically, I was saying. Consolidation, it's not a perfect triangle in the drawing, but we had the lower high rejection below 236 Fibonacci, which is 442, and then a flash crash sell-off. Sometimes I like to bring open my volume profile, and let's look at basically all the price of 2025 and see where we are. So we're hitting this larger traded price area, 434. We could get the bounce all the way back to 440 or perhaps 437, and making sure this is not going to turn into a longer term downtrend. We could get a lower high and then a lower low down to 429. So again, intraday, I'm looking for, we had upside down head and shoulders back in January. So looking for something like that. Double bottom, upside down head and shoulders, or a strong V-shaped recovery on positive news. A couple setups I'm looking for as a long. But again, if I'm an investor longer term, and I rewind all the way, I'm looking at all the way back to 2020, look how far we've come from the bottom of the pandemic, which was 5 years ago. This feels like yesterday. 5 years ago, we're up still 100%. But on the daily Dow Jones, you could see clearly when you zoom out, the double top below 451. This is what rejected us outside of this market. It's not random. Not random. Technical price patterns can help. So the daily chart, the next pivot low and the trend line support zone is around 427. That's the longer term target. If we get there or not, it matters just in terms of perfect entry, but it doesn't have to be perfect. Somewhere close enough, we might get a bounce if someone's long only. And again, no one's forcing me to trade right now. IWM. We are consolidating and we crashed down below this pivot point. So again, pivot points matter on a daily chart. And it went right to my target. My goodness. Isn't it? It's kind of scary how good technical analysis can work sometimes. If I just have the patience. If I just put in the work and have the patience, it actually can have greater than 50% success rate on a daily chart. For example, so we had this range of 2.5%. And this went to the downside, exactly 2.5%. Looking for any clues here. We're touching a weekly pivot support. Okay. We're touching S1 on a daily support. Okay. We're oversold on a 4 hour. We're oversold on an hourly. Oversold on the RSI. Oversold on the 15 minutes. So I'm expecting some kind of relief bounce. Sometimes you get a flash crash on a 15-minute, looks like this square, where you have the tremendous crash because of options expiration, capitulation. And then sometimes if we bottom out, wherever that's going to be, let's just say 215, 216 zone, for example, might get that bounce, retest of 220. So this is what I'm looking for and planning for ahead. Russell 2000 not so strong. We had a higher high, higher low, and then basically got double top rejected below 245. So again, there's a slanted head and shoulders. This might not be over. This might not be over for small caps. So I'm watching very closely the 213 level to the downside. Okay, rapid fire. Let's just verbally do gold. So gold is still rallying, flight to safety, but we're below the resistance 2 pivot point, and we're starting to get overbought, but it's not the end. You need to see some kind of very large, obvious pattern on gold. I need to see like a double top or like a head and shoulders, something larger to really spook the market out of gold, or some tremendous news changes. So I'm expecting gold to just kind of hang out here. Maybe we'll get a pullback down to 265 just because it's getting to that range, but gold's still in this uptrend breakout. Silver had a sell-off. So we just had a global broad sell-off. But in terms of pivot points and levels, we need to stay above, definitely need to stay above $29. So I like to use multiple trend lines and hold above this 29.40 level. If we don't, it's not extreme. We just had an intraday kind of rejection going consolidation to the side. We had a gap up and then a pullback down. US oil, unfortunately, US oil went from a double bottom to a triple top. So it's consolidating to the side right now. Oil more based on news. It's not about technical chart setups. This was more of a technical chart setup where you had a consolidation, rising wedge type of pattern, and it broke out, pulled back. I can probably Fibonacci this, and we're losing the 50% zone, trying to go into the $74 range. Natural gas, I closed my natural gas. So just a quick trade review on natural gas. This is not financial advice, but after I closed my long, I opened another small position size options call, single call options leg. And I caught this gap up, and then I ended up selling on Friday just because it's getting a little bit too high for me. And with all this market volatility and movement, if I didn't sell my call option, it could very well fall back down to break-even price or actually turn into a loss. So because options need to be sold during market open hours, I just sold my option for profit. It was a monthly option, but I closed it after a week. So just a little bit of trade review. So I'm not holding that option forever until the end of expiration. That's really not a good thing to do. But natural gas, we're looking at the pivot points holding above 2183. We'll see if we get a double top because it's pulling back. If it bounces one more time to 2250 and rejects, might get a sell off. Also, the weather is starting to improve. I think in about approximately a month, it's going to be spring. So we'll see if the weather changes are going to change the supply and demand factors. But the weekly chart is still looking a little bit strong. It's not extreme overbought like it was way back here in 2021. So I'm seeing if we're going to have a pullback and if we could get continuation. It would be nice because natural gas has been in such a strong downtrend and we broke out of that. So this should be a stronger price action. I just was telling you about my small trade, my short-term trade. Let's move on to crypto. Total crypto market cap. What a wild Friday and Saturday as well. The Asia market session just opened, but over the weekend, we had a Bybit crypto exchange hack, $1.46 billion of Ethereum stolen. And then Bybit crypto exchange had to scramble. And then they finally said that they had stablecoin asset reserves to cover withdrawals, and that stabilized. We didn't actually crash. But full transparency, I actually had a loss on that because I had stop losses. And then I got kicked out of all my trades because of this candle. So unfortunate for me. unfortunately, but it's okay. I basically broke even for the week, which I'd rather take that scenario than have a double loss. So it's okay. And I'll just wait for the next setup, which actually might be setting up as we are doing this video, because its total is going into a descending triangle, which is not really the most bullish setup. But as long as we hold the level of 3.1 trillion, I kind of like this double bottom potential. So if this rallies, we could rally to 3.2 or 3.4 trillion. We need to hold above 3.08 trillion, or else we're in for a major pain crash, because this is forming into a descending triangle. We're losing momentum here. So if we don't make a lower high, and if we make a very small lower high, then we might get the same price action as stocks and crash. But I do like that it's holding right above that pivot point. Very strong action. And it's because we had the flash crash back in early February, and then we haven't crashed down below that in the price. So it's good. Weekly's still losing momentum for now. But in the daily chart, this is what I'm saying last week. We still have this MACD histogram and the squeeze momentum that's building. Got to give it time, maybe another month or two, and then we might actually rally 10% in the crypto market if nothing bad happens in between then. So on the 4-hour chart, we could see, I like that we're holding that price. It's very good. Let's flip to Bitcoin. Is Bitcoin on a Bitstamp chart? And if we erase all the indicators, again, what I like to see is, let me maximize it. First, I like to see my MACD histogram showing me momentum on the daily chart. This is good. If I want extra confirmation, a double, I could pull up the TTM squeeze. I'm also getting basically similar, same information, because RSI is neutral at 42. We're going sideways in the price. Good. I'd rather go sideways than down. Then lock in my resistance and support. Bitcoin holding above 95,000. Very good. Very good. People jumping into altcoins, however, we'll see in the next chart. So if we hold above 94,500, let's say in 1, 2, 3 months, we could be able to rally. Because how long does it take Bitcoin to usually rally? At least 2 weeks. 2 weeks to about 1 month. So that's the time frame, sometime in March. And my analysis in terms of past price action is usually after tax season. So in America, USA, we have taxes that are due by April, middle of April, basically. So end of April, May, we might get to see more buyers come in, because maybe some people get their tax refunds or taxes are over and the weather's better. People are feeling better physically and mentally because that taxes are done and the weather's better. And if there's no major crash in the stock market or crypto, we might see buyers coming back. In the 240 chart, there's not an extreme signal, but I do like the fact that we stopped dropping. We're going sideways, trying to double top here, double bottom, and trying to rally to 99. Let's go to Ethereum. Ethereum, even with the hack, this is what I'm talking about, is I happen to get shaken out. It happens on this hack candle on Friday. But we're still in this fight. We're still in the game of crypto. And what I was saying last time is the momentum is still building. I might re-enter on a pullback. Yes, we have a death cross on Ethereum, but I'm looking at support of 2,665 zone. I don't really like to buy at the spot right now that I'm staring at, because it's an intraday resistance point, basically. If anything, I want to buy on a pullback, one of these pullbacks. So entering here, unfortunately got stopped out on the flash crash. Is this the flash crash? Yes, it is. Right? So unfortunately got stopped out there, and I'm just being a little bit more conservative and waiting to see what the outcome is. So if we have another pullback, I might re-enter in the upper 2700s, or I could just wait. Nothing wrong with that. So all I'm doing next is waiting for the next setup. There is a trend line that we're bouncing off of. I do like this on Ethereum. And you could kind of visualize, are we going to get another one of these rally attempts in the blue circle? How long does it take? 30 days. But how long did it take to create the consolidation pattern? 3 months. That's why I'm allowing myself to just have some patience. I do want to remind people that one of my scenarios that I was saying last time actually came true, is that after a flash crash, sometimes we have a bounce and then push up into the EMAs. Now I'm watching very closely yellow light for me. We're at my purple 26 EMA. Is it going to reject down or not? And how far will it crash down if it's going to do that? So that's what I'm watching for. The next pullback, I might re-enter. I'm being aggressive in my mind right now because it's a death cross. If I was very conservative, I want to wait for an up cross, golden cross, and then long there because I have a greater than, on a daily chart, greater than 50% chance that it's probably going to go up if that happens. But buying at the bottom of a death cross that's not 50% chance. That's less than 50% chance win rate. But I'm looking long term. Let's wrap things up. XRP on the daily chart. Unfortunately, XRP had a double top and it's just a little bit too high right now. Some of the news on the lawsuit not really being very fruitful at this time. So it's basically a large megaphone pattern, not my favorite pattern to trade because I need to see some kind of support level being established above 253 or crash down to 228 or somewhere here, 182. This old Fibonacci is wrong. So now, an easy way to get levels if you don't like using moving averages is just get the last swing low to this swing high, and we can see where we're getting stuck. The 236 level, 225, 192, 156. I don't think Ripple's going to really get to 156 in the short term if someone had to ask me because people are just hodling. We're not flash crashing on Ripple because whoever bought in this zone is just holding right now. So use pivots and understand that 226 is the major level if we're going to crash down because lower low, lower high. If we don't recover to 285, we're probably going down to 230. Okay, last one before I do some education. Solana. Now, Solana, why did we crash on Solana? Because the pump.fun sentiment caused us to go down because we have too many scam coins coming out, meme coins. It's bad for the market. Meme coins are bad for the market. It's not good for every single developer, whether they're young or old, or every celebrity or a politician, to just announce and work with companies and have insider ownership and then just launch coins on social media. The bot algorithms are going to snipe the coins, and the end losers are the citizens of the world. I'm going to say for meme coins. So it's not really a win-win for everybody. In my opinion, Bitcoin was a win-win for the most part. Ethereum was basically a win-win. Maybe even Binance Coin. But after basically, what is it now? 16 years of Bitcoin, basically, if I did calculation correct, 2009 to now, 16 years, is that there are too many meme coins. Do we really need 5,000, 4,000 crypto tokens in the world? We don't really need them all, but we need to differentiate, for example, crypto versus altcoin versus meme coin versus scam coin, which meme coins might be considered scam coins, except for maybe like the top 0.01, the top 0.1%, like the top 3 meme coins might be real, or top 5 or top 10, but everything else is probably scam junk, unfortunately. So Solana needs to work on its reputation and get away from Solana right now equals scam coin. That's what people are thinking. That's why the sentiment is getting lost. Because if too many people lose their money in meme coins, they're going to quit the market. They're going to label it a scam, and then quit the market. The same thing happened with altcoins on the old Binance.com Wild West trading days, if you remember that, before 2019, like 2017, 2016. So altcoins used to be called scam coins when we would crash or it'd get a hack and then they would crash like negative 80% over the weekend, or it would pump 400% on a Saturday. I still remember those days. So now we're getting that in meme coins. And so do I really want Solana? What's the value of Solana? It might not be $250 anymore because we double top there. And that's just my opinion. But let's look at the charts. We're losing 167. This is not good. We're falling out of this longer term trend line that's been holding for about 1.5 years, or at least for the past 3 months. So what we need is Solana to reestablish itself, the price, and bounce back up to $200. It's possible, but it's going to take a industry-wide crypto rally change for that to happen. What am I seeing on the oscillators? Weekly chart is in the middle, but you can see we had the clear double top on a weekly. We lost a weekly pivot hovering around the 50 EMA as well. Losing all EMAs on a daily, which is not good. Yes, I can see the MACD histogram is building, but from my experience, it's not ready to go yet because we need the trend change on the intraday. So it looks like we're going to get one more flash, maybe flash dump on the 4-hour, really get oversold because that's what crypto and the bots like. They like it super low price, like 155. Then we'll get a bullish momentum divergence to get that bounce on the hourly. It's kind of setting up right now. It's Saturday right now, and not everybody's trading, but we still lost this triangle, the sim triangle. So that's why it's kind of not looking great for Solana in the short term. Still in the downtrend. It needs to get very oversold and then have some kind of reversal pattern for me to re-enter a trade. So the too long didn't read. If you understand Reddit, the summary is I'm waiting for the next value price, the crash. Could be a flash crash, could just be a pullback for me to re-enter. The slow movement that we've been having of very, very slow and nobody's sure about what's going on, I'm not going to re-enter that yet. I need to see like some kind of flash crash and then play that bounce. Or reversal, trend reversal, and then get back into the market. But it's probably going to take a couple months. Okay, let's go ahead and just end this video with the last bar replay trading for a few minutes. I want to remind people, paper trading and bar replay trading are the two best tools of TradingView that I think are underrated and not enough people are talking about it. People are really talking about meme coins right now. But for me, my perspective is that instead of meme coins, it's all about strategy, winning strategy. What strategies work in this market that have a greater than 50% win rate? For me, those are longer term charts, daily, weekly, monthly. There's a big hint, secret I just said right there, right? Intraday can go up to 90, 95, 99% loss rate, losing rate. So what I encourage people to do, including myself, I do this basically at least every week, once in a while. I used to do it every day, is bar replay. Just turn it on. Click your favorite coin. I'm on Solana right now. Just rewind here. Let's just pick a random spot. You can also use the random selection day, but I'll just pick here because I want to explain how FOMO works. Is that let's pretend I didn't even have these drawings and I'm in the replay trading. Now, let's just pretend most paper trading accounts have like 100,000 or something USD. So let's pretend that the price of Solana is 201. So let's use 500 Solana as our position size. Erase everything. I'll just leave that actually. So sometimes what I like to do is just look at the ATR to understand what's the average true range movement. So that's already 7%. So I know I need at least a 7 to 2 ATR, 1 ATR to 2 ATR stop loss automatically if I'm going to swing trade this thing. So I'm going to do a 14%, for example. And I'm pretending I'm long only. So I'm hoping to capture 28%. Right? To make it easier numbers, let's do 10% stop loss, 20% gain. That's that William O'Neill like formula. 7% stop loss, 20 to 25% profit. That's just for swing trading though. It's not really good for investing. So we're going deep here. So let's go ahead and 3 times speed and let it go. Now I see the price getting rejected. I'm not going to use any other indicators except for this old trend line. So it's getting to the overbought zone. Let me draw one more trend line. Where would I like to buy? If the price ever crashes back down to like 124, maybe 150 area, maybe I'm going to re-enter. So here we go. Okay, this could have been a short opportunity. There was the double top M to reverse us down. So I'm expecting pullback. Okay, wow. Okay, so we hit the targets that I was saying. So I have 3 options. I could buy, I could sell, or I could do nothing. But in this case, because let's pretend I missed the flash crash bottom, let me just get in here. Okay, 14% stop loss, $100,000 trade. Let's just buy. Now, sometimes this happened. This is what happened to me, for example, is I got kicked out of my trade off the Bybit. But that's okay because I want to protect myself from extreme crashes. I'd rather have a small loss than a large loss. It's okay. So I'm put my take profit up here at the 25% range and my stop loss. Oops, let's rewind that. Sometimes the bar replay does not work perfectly. Doing 500. Let's we have to do this over again. So let this crash down. There we go. So buy, and then very carefully add my stop loss, and then take profit. Okay, there we go. Sometimes it bugs out and just sells, which is what happened, which is not what I wanted. Let's just let it play now. So here's an example getting stopped out. So sometimes the first trade, the first entry is not the correct spot, right? Because it kicked me out of that trade. Now I have 3 options. What am I going to do? Buy, sell, or hold. So because this is my spot that I was planning to enter, let's just re-enter a little bit lower. Maybe this time I'll use a mental stop loss for more advanced trading, right? Because sometimes you just get kicked out for no reason. And we're rallying and we're pulling back. We would have almost got stopped out there. And then finally take profit, right? Would we have got stopped out? On the second trade, we would have not. If I had a 14%, maybe just barely survived. So again, the market makers, the algos, they know that people use ATR. So sometimes it's dangerous to just keep jumping into trades with thinking I'm safe with a stop loss. If I just had patience of waiting 1 or 2 days, this just happened to me and it happens to everybody on Bybit hack. If I just waited 1 day on Bybit hack, maybe not buy before the options expiration, then I could have bought the low and actually had a gain, right? So sometimes patience and just waiting or just willing to retry will end in a net gain just after 2 trades. But let's keep going here. Let's keep going here. So we had the upside down head and shoulders. I like that. That was potentially 30%, which we didn't hit that target. We're riding that trend line. Are we going to lose it? We lost it. And I'm anticipating more downside. Now it's reaching that liquidity support level down here at 121. My re-enter soon. We had the first touch point there. Are we going to double bottom? Is it going to pull back down for me? There we go. Okay, so the double bottom, that's why. My experience in crypto, we just went through this together, is that sometimes the first crash and then we had that rally, and if I enter and then put a stop loss, it's going to crash back down to me sometimes, right? So that's why, because we have a double bottom and it just happened to us, I'm going to enter this trade with my stop loss down here. This is not the correct position sizing. I'm not advocating people keep risking 14% of their entire portfolio, for example, on a trade. It's just I'm using a standard paper trading number. Let's enter in the stop loss here. If I get kicked out, no worries. Starting to rally, and there we go. Right? So again, emotionally, I could have been shell-shocked and saying, oh, we're going to crash, we're going to crash, we're going to crash. But my experience taught me is when we had the first support level, we established that. So we know 131 is there. Went to the upside, pull back down. That's the same spot, 125. Okay, then if we come back to the same spot, I'm seeing a larger, I didn't see it before, but now I see it, is a larger W, a larger double bottom. And then we have a smaller double bottom right here. So there's two signals for me to enter that trade, and then we take the profit. So let's just end here. I don't want this video to go too long. Let's go and flatten, exit. Actually, it's fast forward to the end. Congrats, 66% win rate, which is around my normal win rate or higher. And let's analyze this. What do we have? Let's look at performance. So, list of trades. There's only 3 trades here, right? All long. Average profit was 9,000 USD. Average winning trade was 20. Average losing trade. So that's 2-to-1 risk. That's fine. Risking 11,000 to try to make 20 or 21 almost. So it's 1.7 ratio. Could have held a little longer or targeted higher profit, which is fine. This is key. How many bars were in the trade? That's 17. So that's 2.5 weeks for me. Average bars in winning trade, 25 days. So swing trading, the day time period is much longer. That's why I'm always thinking about months. I've done so much research and back testing. I know. For swing trading, I need to think about like 1 to 3 month time horizon. And this is interesting. Losing trade bars is 3, meaning if I'm wrong, I'm very wrong very quickly. Just like what happened in the Bybit, which is okay. I'm not scared. This is crypto trading. I will get scared. I can say I'll get scared if like every crypto exchange like gets hacked at the same day or something. It's like, okay, that's kind of scary. Or like all of the internet in the entire world goes down. It's like, okay, that's catastrophe, right? But for the most part is if it's just going red, don't get scared of that if I'm not in the trade. That's my mentality is if it's coming towards my support level, instead of panicking, looking at my watches, be like, oh my gosh, it's so red everywhere, is understanding that I have a level set here. Diagonal support and horizontal support. So if it hits that level and it bounces, maybe I should buy that. That's the kind of mentality I have. Opening up some oscillators, what kind of hints do we have? Well, we had MACD histogram momentum, double bottom. We had another MACD histogram momentum, RSI bullish momentum. And that's why sometimes waiting for the second confirmation rather than the first touch point is key. Risk management as well. I'm using very large numbers right now. This could easily have been scaled down 10 times smaller or 100 times smaller and making the risk only, or even like 1,000 times smaller, making the risk only $28 or $280 or $2,800. So it's just a mathematical example just to prove my point. All right, everybody, thank you so much for watching. Remember, let's manage our risk, manage our emotions, manage our strategies, execute the strategies, manage our position sizing, and have patience in this market. It's all about discipline and strength right now, mentally and emotionally, with all these changes. So thank you for watching. Hope you learned something. If you like this video, go and click subscribe, like button, leave a nice comment, and I'll see you in the next video.